One of the main questions I consistently get, whether it's on Twitter or whether it's right here on YouTube, is honestly a good question, and it's, if I was starting over tomorrow and I didn't have a 7-figure dividend portfolio that currently pays me $91,000 per year in dividends, but I was starting with a relatively small portfolio, what in the world would I do? How would I start? What would I buy? Etc. Now in today's video, we're going to break down exactly what I personally would do if I was starting over, if I knew everything that I know currently, and like I said, if I was just starting to build out a portfolio as of today. So if you're newer to investing, especially if you're newer, make sure to stick around, drop a like down below, and let's get right into it. If you are a dividend investor who wants to level up your portfolio, you need to be tracking your dividend income consistently. And that's why I created the perfect dividend tracker that I've used to scale my dividend income up to all-time highs over the last year. Now, along with this dividend tracker, you're also going to receive my A to Z dividend investing ebook, which shows you how I personally started from $0 several years ago to now where I earn over $7,500 per month in dividends. So if you want this tracker and the ebook, go to the first link down below in my description and grab it today. Now, the first thing that I would do is something that I personally did do building out my portfolio in the early days and even do as of today. One of the main important aspects about building a long-term portfolio, regardless if you buy into stocks, ETFs, or whatever the case might be, you need to use your active income and or your savings and put that money into your portfolio, get that money to work as soon as possible. Now, I personally built out a savings account for several years and didn't have a single penny invested in the stock market, didn't own a single stock or ETF until much later. But once I started getting into investing, I started funding my portfolio consistently with active income, putting money from my day job into the portfolio, as well as moving money from my savings account into my portfolio also. Now, of course, however you want to do this and whatever rate you want to do this at is totally up to you. Some investors might take a large portion of their paycheck and or a large portion of their savings and do a lump sum investment into the stock market. For me personally, what I did in the early days and what I definitely would do all over again is taking a small bit of money, consistently buying into the market, and honestly learning as much as I can as fast as possible, basically as time goes on. But by consistently funding your portfolio, whether it's through active income and or through savings or a little bit of both, that is going to give you the best chance on building your portfolio as fast as possible. Now, that's also how a lot of investors are very surprised on how I'm 32 years old, but have been able to build out a sizable portfolio like you can see right here on the screen. And that's simply because I've been doing exactly that, using money from savings, using money from my day job, and consistently contributing to my portfolios day after day, month after month, now year after year. Now, number two, this is also extremely important. This is what I would do if I were starting over. If I didn't have the portfolio that you see right here, if I was just starting over at zero tomorrow, I would buy more ETFs, buy more exchange traded funds. And don't worry, I'm going to show you here in a second which ones I also am a big fan of. So whatever ETFs or whichever exchange traded funds you want to buy for your portfolio in the early days, that's totally 100% up to you, of course. But some of the ETFs that I personally think would be a great foundational position for any long-term portfolio. This is not for an investor that wants to day trade. This is for an investor like myself that's been building a portfolio for several years. I wish in my early days I would have taken my cash balance and bought things like VU, the Vanguard S&P 500 ETF, for example. Also names like DGRO, the iShares Core Dividend Growth ETF. Names like SCHD ETF, which I now currently have a ton of. But imagine how big my portfolio would be if I bought a lot more of ETFs like these a lot longer ago. A few more names just to share with you guys. Do your own research, look into these, but VYM is one of my favorites, the Vanguard High Dividend Yield ETF. And my newest addiction is VIG, the Vanguard Dividend Appreciation ETF. Any of these ETFs, in my opinion, I'll repeat it, are great foundational positions. Think about it like building a house. You need to build your house on a strong foundation, just in case anything happens in the market that might make things feel a little bit crazy. If you build a strong foundation, your portfolio is going to be just fine. Now, depending on your unique objectives and strategies, you're going to have to decide whether or not an ETF like DGRO, SCHD, or VU are personally right for your portfolio, etc., etc. But regardless, the second most important thing I would do if I was starting over tomorrow and knowing everything that I know now is buy more ETFs. ETFs are diversified. ETFs, whether they're actively or passively managed, are ran by fund managers that know a lot more than you and I, especially during the early days of our investing career. I think it's personally awesome to do some single stock picking later on once you understand how the market works and once you sort of have your footing. But in the early days, I cannot stress this enough, buy more ETFs. Now, the last thing I'll say, the last piece of advice I'll give, especially for newer investors out there, and this is something that I would tell myself knowing everything that I know now as of today. I would tell myself that when it comes to investing, zoom out, try to not look at the stock market and or trading on a daily or hourly or minute basis, especially if you are a long-term investor like myself. Right from the beginning of my investing career, I always consider myself a long-term investor. I did and still do a little bit of day trading or swing trading, but for the most part, I buy and hold different stocks and ETFs. I get paid dividends from them consistently. money, and then I reinvest those dividends into more different stocks and ETFs. Now, I cannot tell you how many times in the early days of my investing career, I would stare at a chart of a stock and maybe wait for the perfect entry point, try to study what's going to happen next. But honestly, as a long-term investor, zooming out and looking at things over 5-year, 10-year spans, it's going to make things so much easier. It's going to allow you to sleep better at night, and it's going to help your strategy immensely. Now, if you're talking about day trading or swing trading, then I'm not saying to zoom out. Obviously, there's a time and place for every sort of trading strategy. If you are a long-term investor that's looking to build a long-term portfolio that's going to compound and potentially even pay you dividends over time, consider zooming out and looking at your investments over a longer time frame, at least potentially. Now, the last thing that I would do, especially if I was starting over, is exactly something that I have been doing since the start of my investing career, my investing journey, and this is something that I always tell investors, and I also don't really hear that many other people talk about this, but I always tell investors that ask me, how should they start, what should they do? I always say to come up with an objective or a strategy that works for them and stick with the plan over a long time frame. Now, what I mean by this is that for me specifically, as you can see right here, my portfolio, my objective, my strategy is to buy into dividend paying stocks and or ETFs that offer a variance of different growth or income potential from day one. I own some more growth names like Apple stock, and I definitely own some more income focused names like qyld, for example. But throughout my portfolio, there's different dividend paying stocks and ETFs that again have all paid dividends over time. Some of them have raised their dividends consistently over time, and some of these names have also grown a lot over the past several years. But regardless, that's my specific strategy. Now, that doesn't mean that that's the right strategy for you. If you personally are an investor that doesn't really care about income, but you want to see your portfolio grow, and maybe you want your net worth to grow a lot faster, well, in that case, you probably are not going to want to invest in a huge subset of the market because, again, not every stock or ETF maybe offers that. Now, on the other hand, if you're an income-focused investor, don't really care about total return or even capital appreciation, but just want to earn a massive amount of income from day one and want to build out a portfolio to help you pay for things like bills or something in the future, well then of course there's tons of different ETFs and stocks out there that can also match somewhat of that strategy. But the important part is, especially in your early days of investing, try to figure out what your objective is, what your strategy is. It doesn't mean that this can't change over time also. Throughout the years, my strategy has shifted a little bit more this way or a little bit more that way, but still for the most part, my strategy has remained very solid, buying into different dividend paying stocks and or ETFs that pay dividends, have the potential to grow over time, but if not, offer a ton of income from day one. Now, an example of how my strategy has shifted over the years, I've really moved into a lot more of ETF investing over the past year or two, I will say. I used to do a ton of single stock picking, but as I'm getting older and as the portfolio has been growing, I'm really focused on building out ETF positions just because they help me sleep well at night. And honestly, as sort of a risk averse investor, I like diversification quite a bit. But regardless, one of the best pieces of advice that I can give to every single one of you newer investors especially is come up with an objective, come up with a strategy, and even though you can change it over time, try to stick with it consistently. So now that we went through several different things that I would do if I was starting over tomorrow, let's say, starting over with a portfolio that's worth maybe a few hundred or a few $1,000s. I lastly, most importantly, want to hear from you guys down below. If you were starting over tomorrow knowing everything that you know now throughout the stock market, what's the most important piece of advice you would give to a new investor or even yourself? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.